Hello my viewers, I am Dr. Geoffrey Mbova from accountingnest.com. In our second session, we are going to learn about how to prepare a balance sheet. At the end of the lesson, you learn on how to use accounting equation to prepare a balance sheet and also the 5 steps that guide you on how to prepare this statement. Thank you. How do we prepare a balance sheet? Preparation of balance sheet is pegged on accounting equation. This is actually the bottom line. This is the basic aspect that we hang on when we are preparing a balance sheet. So the first thing we need to understand is, what is this equation? Anytime you hear of an equation, you understand it should be a mathematical model. So we can define accounting equation as a mathematical representation of the relationship between assets, capital, and the liabilities of a business in a particular period. It is also known as the balance sheet equation, and it is expressed as A is equals to C plus L, where A is total assets, C is capital, and L is total liabilities. Now, as we prepare our balance sheet, it is good to relate or to relay what you already know to what we actually want to learn right now. And in my case, I've used a beam balance, which is a replica or uses the same principle to a balance sheet. Anytime you hear of a balance sheet, actually these are 2 words, balance and a sheet. So there must be some elements which must be put in a balance to be equal. And a good example is a beam balance, whereby if you take a pivot, like the one you can see over there, and a bar which looks like that, if you place, for example, 10 kgs of a particular substance on one side, believe you me that the bar will fall on one side. But to make the 2 sides equal, the left hand side and the right hand side, where you put the 10 kgs, on the opposite side, you need to put another 10 kg. That means if you add, for example, 6.55 kgs, that would be good enough to make the 2 sides balance. Still, the side with the 10 kgs is more heavier than the right hand side. And therefore, you need to add another 3.45 so that the total on both sides are equal. I want to take the green carton or the green drum, which is of 3.45 kgs, to be representing, for example, the liabilities, and the one with the 6.55 kgs to be representing the capital. While on the side of 10 kgs, assume that is the asset side. Therefore, it means for the 2 sides of a balance sheet to be equal, the assets should be equal to the capital plus the liabilities. In case there are no liabilities, then our equation will only be equal to A is equals to capital only. If capital is not available, the money used to start a business has been all borrowed from external suppliers, then our equation will be A, assets is equals to liabilities. So this mathematical equation, A is equal to C plus L, is a replica of a mean balance, and it implies that the total assets A are recorded on one side, and then the capital and the liabilities are recorded on the other side of the balance sheet. Now, the easier way of doing this or preparing a balance sheet, it is to follow the 5 steps of doing so. So step number 1, you need to classify the items into assets, capital, and liabilities. That's the first step. Then step number 2, you further subdivide or classify assets into non-current assets and current assets. Now, in case you have got intangible assets, you still need to incorporate them and create some space for them. Then step number 3 is further subclassification of liabilities into non-current liabilities and current liabilities. Then step number 4 is that you identify the capital component and its monetary value by using the missing item technique. But in case this item capital is provided in the question or in the information given, then you are now ready to prepare the balance sheet, because that is the only item that can be either missing or maybe provided in this case. So step number 5 is that you establish the total amount of all the subclasses of assets, liabilities, and the capital. Now, once you have got those 3 main classifications in order and their totals, you are home and dry. You can move ahead and then prepare the balance sheet. The preparation of the balance sheet, it has got a title, that's the name of the company which owns the balance sheet. Then you need to state the balance sheet as a subtitle, because in accountancy there are 4 main types of financial statements. This is the main one. Balance sheet is the main one. So we need to clarify that the ABC Limited, or the company that we are preparing its balance sheet, it is actually a balance sheet that we are preparing. And in the third row, we need to state it is within which period of time. As far as balance sheet is concerned, unlike other financial statements, we use the word as at. And our example here, we are saying as at 31st December 20XX. So from that point, we need to draw a T format like that, whereby on the left-hand side, we record non-current assets and a corresponding column for amount in US dollars. Then on the other side, we have capital and the liabilities and the corresponding amount in US dollars. Then from the groups that have already formed of assets and the capital and the liabilities, we then distribute them all, record them accordingly on each side of the balance sheet. Remember that the 2 sides of the balance sheet must be equal. So when we go to the first case of non-current assets, if you had identified motor vehicle, then you need to record the amount there. The next item is fixtures and the fittings. Of course, these are the common items that we find in a balance sheet or in any organization. Then fixtures and the fittings amount is $3,000 US. We also have got machinery, $100 US, furnitures, 2,000, and then we go ahead and record down the subcategory of current assets, where in this case we have got cash in hand, 500, cash at bank, 20,000, trade debtors, 5,000, prepaid expenses, 3,300, and inventory, of 1100. Then the totals, when you add all of them, they will give you 49,000 US dollars. Then you do the same on the other side, that you consider the item capital, whereby the amount is 15,000. Then you consider non-current liabilities, where under that we have got 10% bonds, which is 10,000. You also have got 4% debentures, amounting to 10,700 US dollar, and then 6% 4-year commercial bank loan, amounting to 4,000. Then you have got mortgage, which is 1,300. All those items are of long-term liability nature. Then from there you can consider current liabilities, whereby under this category you have got trade creditors amounting to 1,000, then accrued expenses 5,000, and income in advance, which is 2,000. Now the total on this other side again translates to 49,000 US dollars. So you can see the two sides are balancing, and that's all about a balance sheet. And that's the reason why we call it a balance sheet, because the two sides must balance. If it doesn't balance, then it means there must be an error, or maybe you have breached the principle of the balance sheet equation. Good. We have come to the end of this lesson, and we have learned the skill on how to prepare a balance sheet. In the next session, we are going to learn on the different formats of balance sheets. Thank you. Hello my viewers, thank you for watching this video. I am Dr. Geoffrey Mbuva. Kindly comment and subscribe for more materials like this. Remember, our materials and notes are available in our website accountingnest.com. Thank you.